Bring in Adam Button, Chief Currency Analyst with ForexLive. Thanks so much for joining us today, Adam.
Pleasure to be here.
So you've got four big themes of the year and global themes. Let's start with China because we've been focused so much on China this week already with the rapid reopening that's happening there. In the short term, it's looking a bit complicated with the spread of the virus and the potential implications there. But you're trying to look a little bit more big picture here with China.
Right. I think we've been through that before. I mean, China to me is like a look back into the middle of 2020 in Canada or the United States when things started to reopen. We've seen what the pain will be. China is really throwing the doors open, and it's going to be an awful month from the looks of things, but they'll get past it. And if I look out at the global scene this year, you see the rest of the world slowing down, even going into recession, and China picking up. And I think it doesn't need to be any simpler than that in global investing this year. The Chinese yuan, Chinese equities are very cheap as well. China has turned to stimulus as well, while the rest of the world is ringing in stimulus. So, you think about all the risks in the world, and we're going to talk about a lot of them and a lot of complicated ideas, but go to where the growth is, and that's China in 2023. And, I think there are a lot of ways to trade that, and I think just the simplest ways are probably going to be the best ones.
Do you think that we will see funds flowing into China in that way, into the yuan?
And I think China, it looks a little bit better than it might have even a year or two ago or in the Trump era. Russia, the invasion there, the war, makes China look a little friendlier, at least relative. Of course, there are risks around Taiwan and the future of China. There are risks around Chinese housing as well. But it's just so cheap, and you have growth there, and money follows growth, and things don't need to get to where they were 10 years ago in terms of multiples in China or in terms of fund flows, but any incremental money into China, I think, is a boost for both the currency and the outlook there. And when you look at it from a relative perspective, it just looks like the best trade of 2023 to me.
You talked about the potential for a slowdown in other areas of the world, Europe, the UK. I mean, not only dealing with the inflation pressures that we are in Canada and the US, but also with the concern about an energy crisis sort of hanging over them. What's the possible path that we could see currencies, whether it's the euro or the pound, take in the year ahead?
Yeah, I mean, we think about next year, but I also think about this decade. And this decade is the decade of energy transition and all aspects of finding cheap, reliable, and cleaner energy in the world. And so far, really the crux of that battlefield is Europe. Europe doesn't have cheap, reliable power right now. It's working towards clean energy, but in the interim, industry is fleeing Europe. The euro has done a little bit better. And if I think about things I'm thankful for in the latter part of 2022, it's that we had good weather in Europe. And we haven't seen the storage tested. We had a little bit of a cold snap in December, but November was incredible. January is looking good, at least the early part of it in Europe. And that has kept the lights on. But this isn't just a 2022 story, 2023 story. Before that liquefied natural gas cavalry arrives, it will be 2025 or 2026. And you're not going to have 4 years of good weather in a row. And so I don't see how anyone can stay invested in Europe for any amount of time. We're going to see just steady deindustrialization and a decline of Europe. And by the time we get to 2025 or 2026, the holes in the European budget will be so large that they'll cripple Europe for a generation. I see it as basically uninvestable or sell any kind of significant rally in the euro or the pound until they show that they can get on top of this.
We don't have much time left, Adam, but when you're thinking about the Canadian dollar and what the path is going to look like for the Bank of Canada or the Fed from here, how do you think the Canadian dollar is going to perform compared to the U.S. dollar?
Sure, quickly. There's a very real chance that we see a divergence in U.S. and Canadian rates next year. When the Bank of Canada hikes rates, it hits Canadian mortgages, whereas most Americans are in 30-year fixed mortgages. So they aren't feeling Fed rate hikes directly. Whereas Canadians, we're seeing $1,000 out of our pockets on rate resets. throughout the country, and that is going to hit the consumer much harder. We're going to see a quicker slowdown in Canada, a quicker pivot from the Bank of Canada, and that's going to lead to, we don't have many periods in history where Canadian and U.S. rates diverged in a significant way, but that historically has led to big overshoots, even a 1 percentage point spread in rates. And it looks like in the first half of the year anyway, that's where we're headed. But it's really a data watcher's market right now. Every economic data point is going to be so important in the first half of the year.
Another year of all eyes on the data. Adam, thanks so much for this. We appreciate it.
Have a happy new year, Jackie.
Thanks, you too. That was Adam Button, Chief Currency Analyst with ForexLive.